Hey everybody, I hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Tuesday, November 5th, 2024. And let's take a look at the daily chart as we went into today. We did a couple of buy climaxes, tight trading range here, possible final flag, and then a bull breakout, weak follow through, and then a bear breakout going back down to test this tight trading range. Probably support down here because of this bull breakout. Traders were trapped down here, and yesterday it looks like the bulls are attempting a double bottom with over here. The signal bar is weak. The odds are there are sellers above the bar, the trading range bar, and a bear bar, and 4 consecutive bear bars in a micro channel down. The problem here is that we might be low in trading range. So rather than sell just above this bar, traders might prefer to sell at some distance above the bar, and that might be a measured move up of the bar, and that gets you at least into the upper half of the range. Let me double check that. I guess it gets you close to the middle of the range, which is better than selling in the bottom third. But either way, the relative lack of sellers down here can create a vacuum effect, because if no one's willing to sell down here, the market has to go higher to find traders willing to sell. The bear breakout is not getting great follow through. We went sideways for a couple of bars. The bears are not selling eagerly and getting good follow through, further trapping traders above. And the more it hesitates, the more traders wonder if the breakout is going to fail and reverse. So on the 5-minute chart today, we had a gap up, small gap up, but then a trend bar on bar 1, and it's a breakout and follow through on the first 2 bars of the day. You'll notice bar 1 is a relatively big bar compared to a lot of these bars in here. It's also closing above the highs of many bars through here, at least maybe 40 bars or so. So this could be a major breakout and follow through. Always in long on the open probably after bar 1, but if you want to wait for confirmation, consecutive bull bars, then on the close of bar 2, the market is clearly always in long. Now the problem, let me just draw, here's yesterday's high. Remember, I thought there would be sellers above yesterday's high, but the problem is that the sellers may not come in until some distance above the high, so not necessarily directly at the high. And here, I'm just marking the top of this trading range, or at least near the top of the trading range if we zoom out. Better yet, what I'm marking is this price here. So I would suspect there are sellers up here, big down, big up, big down, big up. Looks like a trading range. So that is why I marked the red line up here. Just look at the first few bars of the day. 3 is a bear bar, but tail below. Consecutive bull bars. Any trader who was short, or really any trader down here, whether you're selling or buying or flat, you're trapped. Bears who were short are trapped into a losing trade. They're holding a losing position, and they're hoping for any pullback to avoid a loss or to minimize their loss. Bulls, they're maybe adding on to their position. The breakout looks like it's going to get a second leg, and any trader who was flat is missing the rally, and they're desperate to get long. So the odds are traders will buy the first pullback, and we have an implied pullback in here. No bar traded below the prior bar, but we do have tails. We have a bear bar. We know that if we looked at a smaller time frame chart, we would see a pullback. We would see a bar trade below the low of the prior bar. But here, it's a spike all the way up to bar 8. So we have an 8 bar micro channel, even more bars if you incorporate the prior day's close. And this is a strong enough breakout to expect a second leg up. There was slight hesitation at the prior day's high, but then we got a strong breakout and follow through above the high. So right away, we notice a couple of big bull breakouts, lots of traders trapped below. We have open gaps. Here's an open gap. Here's another open gap, and these are pretty big gaps. It looks like the market is trying to go higher, and we finally got a pullback on bar 9. Now, this looks like a weak reversal attempt. If anything, the market looks like it's converting into the channel phase. So we have a breakout, spike phase, pullback, and now we're expecting a weaker channel phase. So we expect prices to go higher, but weaker than it did here. And that's what we got. We trade to a new high, traders take profits, bulls take profits at a new high, and bears sell. 12 may be a double top, but no significant trendline break. And look at the follow through on 12. It's occurring in a tight trading range. And when there's a big trend bar in a tight trading range, they typically do not get follow through, and traders will actually do the opposite. A big bull bar, they'll sell. Big bear bar, they'll buy. In this context, better to buy. We channel up for 2 or 3 legs up to bar 16. And what do you notice? 3 pushes up, bar 7, 11 or 12, and 16. But also in here, this is interesting, it's a nested 3 pushes up. We rallied on 14, pulled back into the close of 14 and sold off on 15. Rallied a second time on 15, pulled back into the close and pulled back on 16, and then rallied a third time. So there are 3 pushes up in here, and this is a bigger third push. So the odds are there's probably more traders selling up here. Bulls are exhausted. We're far above the moving average. We're in the channel phase, and channels evolve into trading ranges. And bar 9 is a test target. Bar 9 is the bottom of the pullback, the start of the channel. And the start of the channel typically becomes the bottom of the trading range. So here that's the bar 9 low. We have 3 pushes up, and the odds are we're going to pull back and test down here before we get the bull breakout. Also, just look at the bull breakout attempts at new highs. 11 broke out to a new high, but lots of overlap. How much of bar 11 actually broke out? Less than half of the bar is actually breaking out, and it didn't get follow through. Bar 12 was the following bar. And then same problem over here. Judge the strength of the breakout. Context aside. Small bar, lots of overlap. Another small bar, trading range bar, lots of overlap. And when you add context to it, it's a nested third push up. The odds are this breakout is going to fail. So dangerous to be long up here. Traders will use a tight stop and be quick to get out if the momentum starts to slow down. Otherwise, they might use a wide stop. The problem with using a stop below bar 9 is that the odds are there are traders buying down here if the market gets down here. Traders will use a stop below 9. You can argue it's a major high or low. If this is a bull trend, the market should not fall below bar 9. So traders holding long with the premise that this is a bull trend can put a stop below 9. And then 17. Selling off, that's a strong enough bar for a second leg down. Like I said, the bar 9 low is a test magnet. We may have to get there. Consecutive bear bars, but we sold off on 17, pulled back, sold off on 18, pulled back. We're probably going to pull back or reverse as we get closer to the bottom of the range, and we have a couple of attempts down. 18 overlaps. 17, a lot. and look to the left. Lots of overlap in here. And then look at bar 19. Here's the low of bar 9, 57.81. Low of 19, 57.81 and a quarter. 19 sold off and stopped one tick above the low of bar 9. So bulls with a stop below 9 did not get their stops run, and bulls were able to defend the stops. And there was support in this area. 19, not the strongest buy. The signal bar is not all that great. Small body. The bar is mostly tail. And after two big bear bars, consecutive bear bars, 4-bar micro channel, traders might wait for a second reversal. But then we got bar 20. And 20 is a bull breakout, and it traps traders. Bulls who doubted the breakout did not buy, and bears, they probably sold above 18, expecting 17, 18, 19 to get a second leg down. Why would they sell above 18 and not 19? Because it's the last bear bar closing below its midpoint. Usually better to sell above a bear bar rather than a bull reversal bar. So you have bears who sold above bar 18, they're trapped on the bull breakout 20, and you have bulls who did not buy, and they're also trapped. The bears, they scale in higher, they look to the left and they see possibly the top of a trading range. This bear breakout should get a second leg down. They'll scale in higher and look to avoid a loss. And bulls who missed the rally may set limit orders to buy exactly where the bears are looking to avoid a loss and exit shorts. So there's support at the bar 18 high. And look where bar 21 tested. And then we rallied for a couple of more legs. At this point we have 3 pushes up, but this is a fairly tight channel. And if you're going to call this a wedge, 3 pushes up here, 3 pushes up here, you can do that, but you have to remember the open gaps here. We have an open gap in here, the bar 18 high, and the body's on 21 or 22 or 24. There's a body gap, and there has been no bar that even touched the moving average today. Never mind, closed below, and that's a mistake. Bar 19 touched. But we have one bar touching the moving average today, and none of the bars closing below the moving average. This is a possible bull trend from the open, and it increases the risk if you're looking for a wedge top to sell when there are this many bars above the moving average, and the bears are having a hard time making money. Even limit order bears, they made money in here, but over here the bears are not making money. Through here the bears are not making money. If they're quick, they can avoid a loss. But the buying pressure is much stronger than the selling pressure. The bears were trying to get a wedge top, maybe a double top with over here, 27, bear breakout bar, but no follow through. And the bears are trying hard to reverse the channel, but the channel is, again, it's fairly tight. It's parallel to the moving average. It's not climactic. It's not racing away like this. It's not forcing traders to, it's not shaking swing traders out of positions. Anyone who bought anywhere holding through here, you're not getting any crazy buy climaxes far from the moving average to entice profit taking. So this is pretty good for the bulls. For the bears, there's not much to sell. And I want to make a point about somewhere around here, let's call it 12 o'clock. Around 12 o'clock, we're looking at the 5-minute chart, possible wedge. But the channel up is tight, and just take a look at the 15-minute chart. Are you eager to sell here? Not really. You have one bear bar, a couple of dojis, really just one bear bar. Strong bull breakout, spike in channel. Now, we are at this resistance level. That is true. But how desperate are you to sell after the buying pressure here? At least over here, we had this trendline break, then a retest, and then we started to sell off. We don't have that here. This bear bar is not breaking a significant trend line, and we're continuing up here. So always in traders can hold long here, and traders looking to sell are looking for a wedge top in a bull trend. 33, 34, possible exhaustion gap. It's either exhaustion or a measuring gap. When the bulls are hoping, we rally for a measured move, maybe of this lower trading range up to here. There's more conservative targets. I don't know, maybe this trading range. There's the target. But most breakouts pull back, and bar 33 is an outside bar, which is an expanding triangle. So let's look at the breakout points. We have the bar 30 high. We have the bar before the outside bar, bar 32. Let's start with bar 30. Bull breakout, but let's see pullback. Buyers below 34, but fairly disappointing entry bar. Probably more sellers above this bar. It's a weak high one. High ones typically pull back. Think about the buy the close bulls. 34. Disappointed with this bar. They'll probably look to exit, buy lower. So 36, we come back down and test this breakout point. But 36 has more momentum than the bulls might want. You can't argue it's two legs down, sold off 35, pulled back, sold off again 36. So some traders will buy the breakout point. Over here, the bulls rally, but look what happened at the high close. Traders were disappointed. Those who bought the close, looks like they are exiting their longs and not as interested in buying up here because there's no momentum. We're going sideways. So we may have to pull back, maybe to the moving average, maybe 35, 36 needs a second leg down. Instead, we rallied to a new high, but at the new high, we're starting to go sideways once again. But this pullback is sideways, and again, we're completely above the moving average. So as far as selling here, I would not. This is a bull trend, and 80% of reversal attempts are going to fail. So it's better to buy reversal attempts, buy below bar 44, betting the bear breakout will fail. 45, bear breakout, but the first close below the moving average all day. The odds are traders will buy the close. 45 is more of a buy the close bar than sell the close. We're also testing the low of 36, where traders were trapped down here on this rally. That creates support, and the bears were unable to get a breakout. They broke out below it, but could not close below it. Never mind, far below it. So more of a buy the close bar. But then look at 46. 46, a little bit disappointing. We tested the breakout point, and then think about what I just said. Traders are buying reversal attempts because it's a bull trend, and 80% of reversals will fail. So think about if you bought here. This isn't necessarily the greatest buy, but let's think about if you bought here, and then you get 45. You scale in on the close of 45, maybe below 36, or 45 below 36, and then 46 rallies to the breakout point, and you're able to avoid a loss if you're quick. But this needs a second leg down, and we're getting it. But this is all minor. Strong bull trend, and then a lot of sideways. The bears need to do more to reverse this trend. We have a trend line here getting broken. That's good for the bears. But now we need a retest of the trend's extreme before the bears look for any major reversal. So a decent trend line break by the bears, but it lacks consecutive strong bear bars. We went a fair distance below the trend line, but lots of overlapping bars. Spike, pullback, channel down, and it's evolving into a trading range, and we're testing higher. Tight trading range through here. Again, we have that trend line break, but the market typically goes back and tests the trend's extreme before attempting a major reversal. So we may drift higher here, waiting for the retest, and then we'll see what happens. We'll judge the strength of the retest. But here, the bears are hoping for a lower high. and a double top major trend reversal selling here. The problem, you may be selling low in this trading range. Consecutive trend bar is good for the bears, but think back to bar 51. The market traded below 51 and trapped traders. There's a stop order, sell below 51, and it failed and we rallied. So what's going to happen when we retest that price? There's probably going to be support. The market tried to break below it and it's reversing back up. 68, strong enough bull breakout, probably going to go at least a little bit higher. The bulls see a bull trend, double bottom, bull flag, and they're hoping we rally to a new high. We're having trouble rallying here above this trading range. We have a low 2, low 1, 70, low 2, 75. Bear breakout attempt, but overall in the middle of a tight trading range. So it's a bear trend bar, but middle of a range. Might be better to buy the close, and that's what happened on 76. We rallied to a new high, and it was just about the end of the day. So the bears never really had selling at the high of the day, and there was not much of a major trend reversal set up over here. I didn't trade today, so I do not have trades to share. I was watching for a little while. I did notice this bull breakout and the possible buy at the 18 high, but I decided not to take it. And over here, I thought about buying the 30 high, but also decided not to take that one. So I saw a couple of decent trades, but took 0 today. For stop order trades today, you could buy above 1, betting on a trend from the open. Maybe you wait for bar 2, buy above 2. Decent bull breakout, always in long, probably going to get a second leg up. Traders will buy above any bar because the breakout, the reversal attempt on 3 is weak, and we're probably going to test higher. Remember, over here, if I can zoom out, we have an overall, this was a bear channel, but channels evolve into trading ranges. So the risk for the bears here is that the top of the range could be all the way up here. So you can buy betting that the market will rally and test toward the top of the range. High 1, bar 10, you could call it a high 2. We sold off on 9, rallied, sold off on 10, rallied a second time, micro double bottom. You could buy for a scalp. 13 you could buy, but we're entering a tight trading range, really not ideal. 19 you could buy, maybe a little aggressive because of the sell-off, might need a second leg. And then through here, I thought 53 was reasonable to buy, but not sure it triggered. It did not trigger on the next bar, and if you did get long, your follow-through wasn't great, lots of overlap. And we're testing near the top of the channel, spike in channel. We're testing, this might be the top of the channel, maybe up here, but in either case, that's where the market is testing. And the rally might have 2 or 3 legs up. And through here, maybe there's a sell below 64, betting this bear breakout had a complex 2-legged pullback and you'll get a second leg. That's more of a scalp. This is an overall trading range and you're trading against the direction of the major trend. Traders might buy 72, 76 looks better. Now we have a double bottom. And after this bull breakout, we have an open gap. Traders who sold above 66 are trapped and they're squeezed out here. Limit orders, I mentioned a few. This rally is strong enough that the first reversal will probably fail. Rather than selling an inside bear bar, traders might buy below, rather than buying below the bar 8 inside bear bar, traders might buy below bar 7 and get filled on 9. Traders will sell at the high because we've entered the channel phase, and in a bull channel, traders are selling at the highs, at swing highs, and buying below bars. So there's a buy below 11. Think about selling one tick below 11 with a stop order after a tight channel, and that's your signal bar. It's a pretty bad trade, and if it's a bad stop order short, it's a good limit order long. 12, there's probably sellers above 12. That would be a third push up, and it's the top of a sell climax in the channel phase, and we'll likely get back down and test the 9 low. I mentioned the limit order buy at the bar 18 high. You'd get filled on 21, and you may not have gotten filled, and maybe you'd have to buy at the market if your order wasn't filled. Tight channel, but hard to buy because of the overlap. In real time, it's hard. It doesn't look like much of a bull trend here. This looks strong, but this is a lot of sideways. You're not sure if it's going to be a wedge top, if this is an overall trading range. One thing to notice, 19 was slightly higher than 9. That's a higher low, and we're getting higher highs. So technically it's a bull channel. We are in a bull trend. So traders will buy weak reversal attempts like bar 26, bar 30, 35. They'll buy every reversal attempt. Tight trading range through here. So a micro channel down, bad stop order, signal bar, and bad context to buy above 50, so traders will sell. But then 51's a bad low one, and traders will buy below 51. There's a sell above 57, 2 legs up, top of a trading range. You get filled on bar 60, but very tight range, really not necessary to trade through here. And if you are, you're looking to buy low, sell high, and scalp. Probably a limit order buy at the 51 low over here, but you really have to judge the momentum, and maybe you'd rather wait rather than getting filled on bar 65, wait for 66 to close and disappoint the bears, or maybe wait for 67, a bull bar, consecutive disappointing bars for the bear breakout. And you're low in a trading range. Bull breakout, buyers below, buyers at the 67 high, 66 high. And that's about it. Where do we go tomorrow? First of all, today was a bull trend day, bull trend from the open. But you can see we spent a lot of time actually going sideways. Here's the daily chart. It's a little confusing. Big down, big up. We have a bull trend bar, but a bad signal bar. Bad signal bars are often tested. And what we might be doing is testing the apex of a triangle. We had a bear breakout, a triangle with bad follow through, and traders might prefer to sell a pullback. This still might get a second leg down, but we may have to go higher to find sellers. But big down, big up, big confusion. Now we have a trend bar, mostly below the moving average, in an overall trading range. And what I'm expecting for tomorrow is disappointment for the bulls. Today was election day, and that will influence the market, but I do not know how it will influence the market. So because of that, based on price action alone, I suspect we'll get a sideways day tomorrow, and the bulls will not get followed through buying. But again, with the election, I do not know what to expect with that. And with that, that's all the time I have for today. Thanks everybody for watching, and I hope everyone has a good night.